In this video, I want to show you one of the most powerful indicators on TradingView that will absolutely blow your mind. With this indicator, you will no longer be among 95% of retail traders who constantly get punished by big financial institutions and banks. With this new ICT fair value gap strategy I'm about to present to you in this video, you will be in top 1% of traders who actually know what they're doing. Furthermore, you will always be on the right side of the market and profit from dump money. By the way, if you want to take trading seriously and make a sustainable career in this industry in 2023, you definitely need to consider signing up for Trader Edge. Thousands of traders around the world use Trader Edge to get an edge on their competition. With this app, you will save yourself a lot of time and money. All you need to do for the backtesting is to set your initial account size and the profit and loss per trade. Trader Edge will give you everything: the strategy's win ratio, the profit and loss, the maximal drawdown, and much more. It's also worth to mention that the backtester is not the only feature you can find on their website, and this is probably my favorite part about Trader Edge. For example, you're in a situation where you need to quickly calculate the position size for your next trade. What do? Well, you can go to some dodgy websites and waste your precious time on countless ads, or you can be smarter and use Trader Edge instead. Another super cool feature about this website is the indicators and strategies menu. Here you can find the most accurate tools for MT4 and TradingView platforms, and they've all been proven to work. By the way, if you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem, you will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they will also include 4 high quality strategies that have $100 value. So that's around $500 worth of bonuses, all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is no risk at all. Go ahead and check it out. I will leave a link to it in the description below.
Okay, we are currently on a Bitcoin 5-minute time frame. Before we get into how to utilize the fair value gap indicator that you can see on a chart correctly, let's first talk through what the fair value gap is. Fair value gaps are most commonly used amongst price action traders and are defined as instances in which there are inefficiencies or imbalances in the market. These imbalances simply suggest that buying and selling are not equal. Fair value gaps are created within a 3-candle sequence and are commonly visualized on a chart as a large candle whose neighboring candles, upper and lower wicks, do not fully overlap the large candle. The reason why a trader might be interested in where these fair value gaps occur is simply that the imbalance created by them can become a magnet for price in the future. Just like any other indicators on a TradingView platform, the fair value gap indicator can be added to your chart by selecting it within the indicator search tab. I will show you how to add it to your chart and what settings to use at the end of this video. For now, let's understand its key features. First off, let's start with these green rectangles. These shapes appear every time the market is making equal lows. Typically, the retail traders would place their stop losses for a buy position slightly below the level of support. Since big institutions and banks know this, they proceed to grab the liquidity that has been formed. When that grab happens, the indicator prints a green cross below the price. As soon as all the stop losses from these retail traders get triggered, the market makers would usually take the price in the direction it's supposed to go. So they place a large amount of orders to move the price up. And this is where a bullish fair value gap and the shift of market structure occur. More often than not, when such imbalance is created, the market retests this level again. On the other hand, when the price action is making equal highs, the indicator will display red rectangles on a chart. This makes a lot of retail traders believe that the market has reached its peak, so they begin to enter short positions around this area. Stop losses for these orders are typically placed slightly below the level of resistance. Big players see that and they instantly fill the liquidity void. As soon as a liquidity grab for these sell orders happens, the indicator will print a red cross above the price. When the majority of these buy orders have been filled, the market makers take the price to the opposite direction, and this is where the bearish fair value gaps occur. Based on the information we have learned so far, let me show you how you can outsmart the vast majority of retail traders. So the rules for a buy trade are as follows. First, wait for the market to form 2 equal lows. Second, after these lows have been formed, the indicator must print a green cross below the price. As we already know, this indicates a liquidity fill. Third, a bullish ICT fair value gap must be formed with a shift of market structure. And lastly, the price action must retest this level. Whenever that happens, a buy order should be placed at the close of the candlestick that retested the gap. The stop loss will be positioned slightly below the most recent bullish fair value gap. The take profit target will be set at 2 times the risk, with the adjustment of the stop loss to the break even as soon as the market reaches a 1-to-1 risk reward. Exactly opposite should be done for sell entries. First, wait for the indicator to print 2 red rectangles and a red cross above the price. Second, a bearish fair value gap must be formed with a shift of market structure to the downside. Third, the price action must retest the fair value gap. This happens when the candlestick reaches the level and gets rejected off of it. For short trades, the stop loss will be positioned slightly above the most recent bearish fair value gap. Just like with the long trades, the take profit target will stay at 2 times the risk, and again the stop loss should be moved to the break-even level the moment the market reaches a 1-to-1 risk reward. Here's another example of a short entry. As we see, all the conditions were met and the take profit target was also triggered. Now let me show you how you can install this indicator to the chart. First step will be to log into the TradingView.com and open the charts. Then head over to the indicator search tab and type in ICTSM trades. Select this indicator by MAJKY. By the way, the settings of this indicator will not change. It works really well on all timeframes and all markets that have a high level of volume. You can use it for trading cryptocurrencies, forex or futures. Okay traders, that's it for this video. Thanks for watching and subscribe to the channel for more.